Hi guys, so there's a bit to unpack today in terms of what's going on. Chinese came out over the weekend and yesterday with their growth forecasts, and it wasn't great, and they're not looking to add stimulus. I saw a headline that Jinping is not relying on international markets to get them out of the growth slump, but neither did they actually sort of provide any guidelines as to how they were going to do it. So commodity markets took a bit of a tumble on the back of that overnight. And we're going to have a look at commodity markets. Natural gas got absolutely smashed. Oil was surprisingly up, but it dipped and then rallied. Dipped on the Chinese news and then rallied. But we can see, commodities, copper got smashed as well, but managed to come back to break even, and the commodity index is also weaker. So that's going to have an effect on the Aussie dollar and the Aussie stock market, as that sort of China growth story, which was all just a rumor anyway. If those of you watch this, watch my broadcast regularly, you'll know that I always said it was just a rumor. There's no hard facts, and the hard facts have proven that the China story is not there. Elsewhere, we've also got the markets waiting for Jerome Powell testimony in front of the Senate Banking Committee. We've also got the RBA looking to raise interest rates again. And there was talk, we did mention this, Daly and Waller, potential 6% interest rates. US dollar is just treading water ahead of Powell, but unworried about comments similar to that. And this Adam also thinks the markets underpricing the hawkish implications of that, although treasuries did bounce. And if we look at the US yield curve, so if you put this as a timeline, 3 months to 30 years, you put that as a timeline, like 3 months to 30 as a timeline, and you've got your yield here. This is effectively what they call a contango market, right? So it looks like that, and a contango market is a sign of a recession. A healthy bond market looks like that, right? So very much a case of no interest rates, and no rate cuts this year, and interest rates are going to be going higher still, potentially even as high as 6% in the US from the current 4.75. Right? So there's all that going on, and ahead as well. We've also got the BOC. We've got this loose cannon, Jordan, ECB also talking, and then you've got the Bank of Japan, and you've got non-farm payroll. So lining up to be a pretty busy week all the way through, with key data and talking points to provide volatility. And overnight, US dollar index, has just been pretty much treading water for the last 2 days, waiting for all this data to get out of the way. But it's coming back to where I want to get long anyway. Looking to get into the market around these levels to get that bounce as the market continues to be buying US dollars as stocks weaken and US interest rates continue to rise. So here's the US bond market, a little bit weaker, but started to price in the fact that, hey, interest rates are going to be going up. So have a look at the majors. Aussie dollar, you've got the RBA. Happy to be a seller post the RBA. I'm not going to sell into a rate rise, but happy to be short Aussie dollars and long US. Similarly, there was talk over in Euro that interest rates are going to be, or should peak at around 4%. Euro's around 1.5 at the moment, and they said the extreme is 4, 3%. Okay, so the extreme is 4, so there's only about 1% more for before it starts to really hurt the European economy. Again, happy to be a seller of euros. Just got to find that level, and we've marked this 107.40 as the level. You could almost see a double top here on the euro there. It might be something that you could lean against, or you might be wanting to sort of just avoid the news and trade for the shorter time frame. Pound still just frothy around. I mentioned this last week that it's when the markets are like this, you're just going to burn cash because there's no trend happening. Every time you try and get in, it doesn't go anywhere. So I can't stand markets like that. And if you put a line across there where we are right now, you're just flip-flopping either side of it, and that's just nasty business. Good way to lose money is to try and trade that. And dollar yen, looking good for a buy. BOJ later in the week, they've already said they want a weaker currency, and you've got the strength of the US dollar. So to me, this looks like another good buying opportunity, whether you want to do it on the 4-hour or the daily. Hourly doesn't look that great, but yeah, that's it for the day, guys. We'll see you tomorrow.